All right, how's it going, everyone? Welcome back to another Cup of Joe investing video. And over the couple of the next few days, I'm going to be discussing some of the reasons that the media, CNBC, and the majority of people think that the market is currently going down and facing a correction. I want to go through each and every point, and I want to go through them thoroughly and discuss whether this is really a threat to the market and to companies' revenue and profits, or if it's just blown out of the scandal. Because why? People love bad news. There's a reason every time you turn on CNN that something bad happens, something crazy is going on. People love bad news, and the news right now, all about the correction, all about how we're going to go into a recession. So first, I want to call out all those fake investors. I want to call out those people that said, I'm a long-term investor. Wow, these companies I'm invested in are so great. All of you long-term investors that are suddenly panicking and have no idea what to do and really care about the short-term stuff, even though you say you're a long-term investor, you are a fraud. You have to go and play another game. If you're getting into the market and you just want some short-term games, you want to make $100 this week, go and take your money to the casino, bet it all on black, and maybe lose, maybe you win, but don't do it in the market. A lot of people say that they believe in their strategy, that they have a good strategy in their long term. A lot of BS out there, a lot of fakers. Also, I want to discuss that. Remember that the market will always end up recovering. People think that when we're in a correction, it'll never go back up. It'll never recover. In order for the market to never recover, our country needs to literally go upside down and bankrupt. Because as long as companies exist, and as long as the U.S. economy keeps growing, as it does over time, number one, due to population increasing, more workers, more efficiency, more jobs getting filled. Also, you have to realize that every time there's been a dip in the market, not only has it recovered, but it's gone past the dip. In 2008, nobody thought that it would recover, right? Look where we are now after this huge bull run. Also, today I'm going to focus on interest rates. So a lot of people say investors are scared of interest rates. The Federal Reserve is raising interest rates, and so the economy will slow down. It's going to be harder to borrow money. Small businesses are going to struggle. Large businesses are going to struggle. Everyone is going to struggle. The whole world is going to collapse. No, interest rates are made by the Federal Reserve by taking calculated decisions in order to prevent inflation, in order to prevent too much growth, which will lead to too much inflation. And what you have to realize is that we just reported amazing growth for the U.S. economy. You have to realize the U.S. economy just reported a 4% growth in the last quarter. That is not normal for an economy the size of the U.S. The economy of the U.S. is the biggest in the world, and it just grew by 4%. If you don't want the Federal Reserve to raise interest rates after we grow by 4%, then go and get out of the market and go to the casino. Also, you have to realize the Federal Reserve, unlike all these corrupt politicians, yes, including senators and governors, especially, all the politicians are corrupt due to lobbying. The Federal Reserve does not need to worry about getting reelected, about raising funds for their next campaign. The Federal Reserve, all they care about is stability in the country and economic stability for growth. They don't want to be elected because they don't have to. Also, interest rates are raising bond rates, right? Of course, the 10-year Treasury just reached 3.5%, the highest it's been in a long time. And I want you to realize that if you're a good investor and you're properly diversified, then there should be enough of a position in bonds in order to benefit from interest rates going up. If you're not holding any bonds in your portfolio, especially I'm talking to people that are above the age of 40, 50 that are going into retirement, then that not only poses you at a great risk as far as diversification is important, but also you wouldn't have benefited from bonds going up. If bonds go up and you're invested in bonds, that's a good thing. Also, more jobs are coming to the US, so the economy will continue to grow even with interest rates going up, right? This isn't a new concept. It's not like the Federal Reserve has never raised interest rates. If you look back into historical context, and of course history isn't a prediction of the future, but the Federal Reserve raising interest rates and continuing to raise interest rates has never caused the stock market to not go up, right? The stock market has continued to produce gains while the Federal Reserve is raising and continues to raise interest rates. Just look back in history. Third thing, the interest rates are right now going up because the Federal Reserve had to lower them to an extreme when the Great Recession of 2008 hit. When the recession hit, interest rates had to go lower in order to incentivize economic growth. Now that our economy is growing at a healthy, above healthy rate actually, the Federal Reserve is raising them. This is not a new concept. You also have to realize that you have to stand behind your companies. So a lot of people, if you're investing in the market and you're investing because so-and-so told you to buy this stock, and you think that this stock is going to go up just because I don't know, I like the company. No, this is why you have to be a researched investor. If you don't research your companies and you don't know them well, because when you invest in a company, not only are you holding a stock, but you're owning a part of the business. And so if you want to buy a part of a business, how are you going to buy a part and not know what the business does? Do your research, read the 10Q, the 10K, listen to the conference calls. What does the CEO have to say? And after all, a lot of these companies, they're going down because of China, while China does not play a big role as far as their growth. Sure, do companies have exposure to China? Yes, many companies have exposure to China, especially when it comes to manufacturing, but not all companies are exposed to China, exposed to tariffs. You have to know your company. Stand behind your company, because if you're selling your stock when it's down 10%, what are you doing? That means you never believed in the company. Because if you believe in the company long term, right, 3 to 5 years, 3 to 5 years from now, you believe the company will be doing better, then in the short term, all this mumbo jumbo, suddenly your stock is down 15%, that is a buying opportunity. You should be adding more shares, saying to yourself, wow, look at this deal I'm able to get on this company that I was willing to pay 10% more for just a couple of weeks ago. Also, I want you to realize that a lot of investors are buying into stocks and buying into the correction because, as we know, corrections are not a new thing. Remember in February of this year, a couple months ago when there was a correction? Where'd that go? Everyone forgot. I want you to also realize that if you watch Shark Tank, Kevin O'Leary said that he's actually buying into positions. And if you don't know Kevin O'Leary, he is known as one of the safest, most diversified, educated investors in the market. Just watch him on Shark Tank. He's kind of an asshole because he's such a dedicated and educated investor. And he is buying into positions. Now, does this mean that you should just go and start buying stocks, 10,000 here, a 5,000 there? No, you gotta dollar cost average. Essentially, buy into the market slowly, right? Buy 5% today, buy 10% on another down day. Don't go all in at once, because then if there's another dip, not only are you not going to have money to buy into that dip, but also the dollar cost average of your investments is going to stay there and you're not going to be able to lower them. And I also want to talk that Tesla just reported amazing earnings. Finally, the company is profitable. Congratulations to Elon Musk. Light up a blunt again. Do whatever you want because Tesla's profitable and I don't think it's going back to unprofitable. One of the biggest short sellers actually went long on Tesla now, and I think this is going to be a big shift. And it's also another reason to remember that the media is not always right. Actually, the majority of time, they have no idea what they're talking about. Bad news sells. Bad news is easy to sell. People like bad news. Thus, turn on CNBC tonight, tomorrow, the next day. All they're going to be talking about is bad news. Is a recession coming? This bear is on the market. This proven investor says there's a bear on the lurking. Stand up for yourself. Don't let the Dow dropping by 600 points today scare you out of the market, scare you into selling. If you're a long-term investor, keep holding your positions and don't lie to yourself and say, oh, I'm investing in this company because I believe in it long-term, and then it goes down by 10% next week and you sell out. That's it for today, guys. Tomorrow, I'm probably going to talk about tariffs. I'm probably going to talk about some of the other discussion points as far as what is causing the correction and what the media is saying is causing the correction and getting down to the details. If you like this video, leave a like, please subscribe, and as always, have a great day.